Welcome to the CFD weekly overview of the global financial markets. The euro climbed against the dollar last week. The common European currency has been boosted by the breakthrough between Italy and the EU over its budget deal, after the country agreed to lower its deficit target. However, economic data from the Eurozone appears to confirm that the economy remains sluggish. The British pound was stable, but remained volatile as Prime Minister May appeared to be at the centre of opposing forces within her cabinet, with one side suggesting another referendum might be possible, while the other rejects it outright, implying that a no-deal Brexit might be preferable to them if the Prime Minister's plan is rejected by Parliament. The Japanese yen was stable over the week, but fell slightly on Japanese government forecasts for economic growth, which were revised down. The US dollar sank last week, even though the Fed hiked interest rates by a quarter point to 2.5%, as expected. The Fed suggested that 2 rate hikes are expected next year, depending on economic conditions. But investors were disappointed that the central bank didn't deliver an even more dovish message, and the dollar fell sharply. The Turkish lira fell, pushed lower by negative economic data such as falling industrial production and a rising unemployment rate. Although the currency crisis appears to be over, investors fear the country may enter a recession next year. US stocks continued to drop last week and were on course for the worst December since the Great Depression of 1931. Fears of a slowing global economy, trade war concerns, and disappointment that the Fed didn't take a more dovish stance on future interest rates pushed shares downward. The tech-heavy Nasdaq index entered bearish territory, although investors hoped for a bounce back by the end of the year. Gold prices grew higher, at one point breaking through the $1,260 level, as the precious metal found safe haven support and as nervous investors moved away from stocks. Oil prices fell off a cliff last week, falling below $46 per barrel at lows not seen since August 2017. Investors remain concerned by rising inventories and record levels of production from the US, Russia, and Saudi Arabia, amid predictions of decreased demand next year. OPEC's recent arrangement to cut crude production by 1.2 million barrels per day hasn't been enough to support crude oil prices. You've been watching the CFD Weekly overview of the global financial markets.